Let's talk about XSP versus SPX versus SPY. Now,
Okay.
SPY is an ETF. XSP is an index option. And starting next week, XSP is going to trade every day, just like SPX. Now we've in my expiration trader at least once a day. Someone says, "Hey, can I just use SPY?" And then they get gang tackled by the expiration trader crowd saying, "No, you can't use SPY." So tell us, um, XSP is essentially SPY, but it's cash settled instead of an ETF. All right. So why is that so important for kind of what we're trying to accomplish, and how can someone take advantage of that cash settlement? There's some nice benefits there.
Right. Well, also your XSP, you're choosing what I'd call like the clean way. So you could have a very clean settlement for a butterfly, let's say. All the options just go straight to parity. Problem with SPY is you could have the mess of taking the underlying. So even a one lot, right? If you're put a one lot or you're assigned a short call, a one lot, you're stuck with the SPY position that you have to deal with the day after expiration. So there's kind of a clean, clean way to deal with the trade. So
Yeah,
and also
that's exactly
I
right.
believe there is some tax benefit to XSP because I think they're calling it SPX like. But I mean, mainly when you're trading one day options, you want that option just to settle the cash without any. You can ride the option into the expiration, but you don't have to close the option. So you can just let it settle to cash. You don't have to deal with any of the mess, which makes it ideal.
Yeah,
I'm
there's
glad they're
nothing.
going.
Yeah, that's going to be good. That should be fun. Um, now what are now not it's not all rosy though. There is some benefits. Now, if you've got the money, SPX is a superior product to SPY, right? But there are some benefits to SPY versus XSP as well. What would you say is the primary benefit of SPY over XSP?
You have the when you want the underlying, right? So you have
Yeah,
you have flexibility to, let's say if you do a put in stock trade or something, SPY craps out, you close out your put, and then you can hold the SPY underlying for bounce higher. There's a
yeah,
lot of flexibility. SXP is kind of your game is over, right? It's sort of like the
yeah.
soup Nazi, right? You're no
No
soup for
soup for
you
you.
anymore because the trade is gone.
Yeah.
So
Um,
SPY gives you a little bit of gives you some flexibility if you want to do what I would say longer term kind of swing trades.
mhm.
If you want to dynamically hedge a position, because you can use the underlying. So sometimes for me, for SPY, if I'm trading strangles and I'm not getting quite to where I want to get to, but the market has moved enough where I could buy, just partial SPY, 50 shares, 80 shares, 100 shares to hedge a strangle position I own. And if the stock rips, I can sell my SPY back out, and you have a clean your delta hedge, which you can't
There's some
necessarily do with
flexibility.
XSP. You would have to trade the E-mini future against it, which you still could do.
But
But
the E-mini future is so much bigger than XSP,
right,
right? The E-mini future is, essentially 5 XSP contracts that are 100 delta equals 1 E-mini future.
right. And XSP is
There's
like
also
1 to 10.
1 to 10, yeah.
And
And SPY is also more liquid, which is helpful for as well. XSP, the liquidity is increasing. It's getting better, but without a doubt, SPY is more liquid than XSP. SPY is not more liquid than SPX, but it is more liquid than XSP. Um, so, all right, there's kind of how the benefits and negatives of XSP versus SPY. XSP is going to be better for kind of our single day trades. It's a clean exit. But on the downside, you do have some liquidity issues. And for longer term trading, you might want to look at SPY.